Hey, what's up, guys? Welcome back to BK Trading Academy. We're going to just discuss about where to put in your entry, how to identify your entry, your setups, when to take profit, where to set your stop losses. These are typical questions and problems that traders go through every single day. How do I know where to buy? How do I know where to sell? And guys, it is quite simple if you make it as simple as possible. Sometimes as new traders, we like to look at a whole bunch of different information from different people, different online things and YouTube and things like that. And then we get so much information and we're all confused. So we're going to just keep it really simple because trading is very simple. It's nothing more than supply and demand. If you can grasp that, guys, I'm telling you, you will be going to the next level to becoming a successful and profitable trader. So let's go ahead and dive right into it, and I will show you exactly what I'm talking about. All right, guys, so I just picked a random chart, and we're looking at Euro USD. The very first thing that you want to do, and if you haven't got this from us before in all of our other videos, I don't know what to say, but the very first thing you want to do is start on the larger time frame. It doesn't matter if you're scalping, intraday trading, if you're position trading, start on the larger time frame. The reason why is so that you can see where you're at, where current price is at, above all of the noise, right? So one thing that I notice is this bottom here. I notice this bottom, and I see the peaks all the way here at the top where price has been in a long time, right? So we're looking back in time and I'm seeing where I'm at because it gives me a bias as to where price may go. If I see that I'm all the way down at the bottom of the chart, I know in the long term, more than likely price will continue to rise throughout time in the future if you're a position trader. So now I have a kind of a bias that it may be long just by simply looking at this, right? So that's the very first thing you want to do is look at the higher time frame. It can be the monthly, the weekly, or the daily. So for example, I'm looking at the weekly. This is where price is at right here out of all of this noise. And if I scroll up, look how high price has gone in the past. This was back in 2008 when price was all the way here at this peak. And then price went all the way at the bottom just recently, right? This was in 2022 in the beginning of the year sometime. All right. So, or even September. So if I do that, I know that more than likely price is just going to rise. So if I got in here, even if I got in now and just position trade this for years to come, I can almost agree. I can almost say that price will continue to rise, but I don't want you to trade recklessly, right? So we want to start narrowing down our time frame so we can figure out our precise entry and what we're going to do. So now that I'm starting on the weekly, I'm going to drill down to the daily. I like to adjust my chart just to see where I'm at. And you can see, I'm going to delete this here. You can see how I drew this line across because this is giving me kind of like a daily, even a weekly key level. So that's number two, identify your key levels. So number one, you want to determine a bias. You want to know if you're going to be buying or selling. Where are you at in the entire scheme of things? And then number two, you want to identify your daily or your weekly key levels. These are considered major key levels, right? So this here is a significant price here. So this can be anywhere between 50 to 100 pips if I were to count it all the way from here all the way to now. This is where around where price is at, but that's fine. That's considered a major level. This will also be a major level here. This will be like a major resistance level. This could be anywhere between 50 to 100 pips, give or take. All I'm doing is marking an area and where price may reach before it starts to reverse. And then I have other levels above here, which I'm not really concerned about now because price is all the way down here. It's going to take a long time if price were to ever retest this area. So I'm just marking these major levels here. I'm going to get my rectangle here again, and I see these peaks here. This is considered a major level. And if we drill down, we can dissect it a bit more and see exactly why these are major levels. But as you begin to do this more, you start to train your eyes. You want to see these peaks here in which price respected and then drilled the other way. Because usually when price comes to a point and goes the other way really quickly, it's going to repeat itself, okay? So now I'm on the daily and I found those major levels here, all right? And then I can even spot them a bit more here. Like this is a major level right here where price shot down and then reversed, okay? So I can stretch that over here. And that's almost where price is at right now. So I'm going to drill down to the 8 hour. You can drill down to the 4 hour. All I'm doing, the reason why I'm drilling down is because I want to start finding these minor levels. So we have our major levels that you will see in the larger time frame. And I want to see these minor levels in which where price may come to a point before it starts reversing. All right. So now I'm on the 8 hour. And if you can't find it as you drill down, then you can continue to drill down to lower time frame. Okay. So now I see this data. Now I'm drilling down. I see this data in between here. This was a nice consolidation. It came down to the support, broke out to this resistance area here. I can adjust it. It consolidated days at a time before it drilled down here to the support again. So this is kind of a range here. And guess what? Price is within this area. So now that I know that this area is significant, in the short term, price can very well come back up to this area and repeat itself. We know that history like to repeat itself. Okay. So now I'm going to drill down to the 4-hour to look at it a bit closer. All right. So now I'm on the 4-hour and let's see what price is doing. So price is within this area. I marked my areas here, these levels. And so now I'm drilling down to try to find some other levels that I can trade closely. So if I want to intraday trade, this will be a sweet spot. The 4-hour would be the sweet spot to kind of identify what price is doing. Okay. So now I'm focused on this area here, this black space, knowing that this is a key area, knowing that this is a key area, and coincidentally price is in between. So what's going to happen? I know one or two things are going to happen. And like I said, I like to drill down even further, but at least on the 4-hour, I know that price can either come back and retest anywhere within this area, hit that like button, or it can do the same thing and come up anywhere in between this area. So now all I'm doing is conditioning my mind as to what price can do before I even drill down even further. So this is considered top-down analysis, meaning that you're starting from the top and you're coming down to try to figure out a precise entry point. We're doing that here. And now as you do that, now you want to start studying candles, the candle's behavior. So I'm going to drill down to the 1-hour here and figuring out what's going on. So a couple things that catch my eye. All right. It's really important to understand the anatomy of a candle, because once you start identifying these things more often, you know what may happen. So this is what I mean. I'm going to get my brush tool here. I notice this long wick here. And typically when you have a long wick, a lot longer than the body, price begins to go in the opposite way of the wick, in which it did. So we have a strong push to the downside. We have a strong momentum red bearish candle here, and then followed by another bearish candle here. So I'm on the 1-hour. I have about 42 minutes left. This candle can definitely come back up and wick the other way. And if so, I may be interested in the buy, but let's figure out what's going on. This candle is pretty strong and it can retest this level here. So remember when I said there's levels on every time frame. Now we're looking at minor levels. So this is considered a minor level right here. So we see where price respected this area right here. Price is actually here now. It's a very bearish candle. So I don't know if it's going to pull back or not. This will be the wrong time to enter, at least on the hourly time frame. We see strong wicks rejection here. Price broke past the support at this area as well, which leads me to believe that if this candle continues in that bearish sentiment, price can definitely come back and retest this area here as well. This is another minor level right here in which price can come down. If price come down here showing that bearish sentiment, then we are looking for a wick similar to this, because like I said, wicks tell us a story. If we see a long wick compared to the body in one way, then we know price will begin pushing the opposite direction. Okay. So we want to look for candle behavior. All right. So at this particular time, this candle behavior is saying, I'm not ready to buy yet. It's filled in. This is the anatomy of the candle. There's no wick exposing. We have 40 minutes left to see what's going on. Now, if you want, you can even drill in even closer here. So let's go ahead and do that. All right, so before we go ahead and do that, I am going to kind of clean my chart up a bit just so we can dissect exactly what's going on. All right, so let's go ahead and drill down to the half hour. So we're looking at the 30-minute time frame. We even have a strong candle, bearish candle on the 30-minute time frame. Now, this is the area we're working with within the 30-minute. This is considered my support area right here. So simply for visual aid, this is my support area. We can see where price respected. We see these bottoms here, and then this may actually repeat itself. So this is an area of interest on the 30-minute time frame that I would be possibly looking to buy. But remember, on the larger time frame, this area as well was a nice area for support as well. Okay, so depending on what time frame you're executing on will determine how you're going to enter. If you're entering on the daily time frame or the larger time frame, you may want to expect to be in that trade for a couple days, maybe swing trade that. If you're on the lower the time frame that you're in, you plan on being in the trade a lot shorter. So on the 30-minute time frame, I may intraday trade, I may even scalp as well, but I'm looking for a precise entry. Okay, so I'm looking for a repeat pattern of this area right here, the possibility of this area. So 9 times out of 10, successful traders are examining their charts. They're analyzing their charts before they even put in the trade. We're not forcing the trade. We're letting the trade come to us, right? So what I would do next is put an alert on here. So those who use TradingView, simply all you have to do is right click, hit add alert. Wherever you right click at, that's where the alert is going to come at. I like to set an alert at least 10 to 20 pips above where I'm expecting to possibly buy, because first I'm setting an alert to say, okay, I know that this is a hot area. I want to observe this and analyze this a bit further before I take the trade, but I know this is a hot area. So I would put an alert name here. I would put something like Euro USD possible buy, right? And I would do the same thing in the message here. All I would do is delete this, and then I can copy and paste it down below here, and then I would create. So this alert here, you'll see this dotted line here saying that when price comes here, it's going to alert me. Just a bit further, because if I'm a serious trader, I don't care what time it alerts me. I just know I'm getting in at a good price. So I like to put my selections, my alert actions here as notify me on the app. I have the app on my phone, TradingView. I like to see a pop-up on the app, send me an email as well. When it notifies you on the app, it kind of gives you an alarm sound. It's an alarm sound that I like. It's kind of a squeaky alarm sound, but it notifies me. It tells me, hey, you have a possible buy or you have a possible sell. Go ahead and enter. So that's what I like to do here, at least a few pips before this area so I can examine it. I like to look at the anatomy of the candle to see if it's giving me a pushback. So remember, Wix tells us a story. If price comes down to this area, touch my support area here, and then it starts to pull back, exposing a wick, and then the candle closed. I like for the candle to close, exposing the wick before I go ahead and enter, and I would enter for a buy at that point. Now, where would I exit? It all depends on a few things. Number one, we always tell our students to risk no more than 2% of your entire account. So risking 2%, that's number one. Number two, how long do I want to be in a trade? If I'm executing on a 30-minute, more than likely, I don't want to be in a trade for more than 24 hours. I want to intraday trade. And then three, how many pips am I looking to gain? And then number four, how volatile is this pair during this particular session? All right, so if price comes here, I'll put in a buy. I get my measuring tool here. So from here, and price can possibly come back up here and retest this. So remember, price like to mimic the past. So I'm looking at this, hoping price will mimic, right? So if it comes to a key level, oftentimes it will reverse. Even if it begins to break this level, you will see price kind of consolidating on this level, going up, grabbing some pips, coming down, retesting, going up, grabbing some pips, coming down, retesting before it breaks. So it likes to consolidate at a key level before it breaks. If that was the case, it may even come back up. All right. So if I may be interested for about 30 to 40 pips, like it did here before, it came back, retested. Look, price came down. So if I get my measuring tool from here to here, price came down about 12 pips. So I have to understand that price may go against me about that, even to this level here, which is about 12 pips or so. So price may repeat itself. Am I willing to risk 12 pips to gain 35 to 40 pips? Absolutely. So that's where I will set my take profit at, right here, around this area. Remember, I want to try to mimic what happened in the past. So I would get about 35 to 40 pips or so. And that's where I would place my take profit. That's where I would place my entry. Now, where would I place my stop loss? It's always wise to place your stop loss away from structure. Okay. So remember, I know that price may come back and retest this wick. It may even come back and retest this area as well. Now, remember, on the daily, I noticed this area right here. This was a major key level here. So one or two things. If you don't want to stay in a trade for too long, you can set your stop loss below the wicks and the candles right here. It may or may not happen, or on the daily. So on the daily, this was my area right here. I can take my stop loss below these wicks right here. All right. Now it's completely up to you what you feel comfortable in, right? So if you are trading from here and their stop loss is here, that's about 50 pips. but I always recommend to do at least a 1-to-2 ratio. So if you're risking 50 pips, then you should be looking to enter and result in a profit of at least 100 pips. But the odds of it coming down to this area within that trading session is not that strong because I mark this on the daily. So this may take a while before it to come down and hit this. But if I'm intraday trading, I'm only looking to have my stop loss around here, which was about 12.5 pips or so, to gain about 35 pips or 40 pips or so. So guys, that's how I actually mark up my charts. This is how I find my precise entries, how I identify my stop losses and my take profits. One, again, I go out to the higher time frame. I want to see where am I at on the scheme of things above all of that noise. Number two, I'm identifying specific major key levels on the higher time frame. And then as I go down to the lower time frame, I look at minor key levels in which I want to trade. The shorter time frame you look at, the more precise your entry will be, and you don't really plan on being in the trade for too long. The higher time frame you execute your entry on, you may be in the trade for a while. Let me know in the comments if this benefited you, if you got an aha moment. And guys, hey, if you're struggling trading, I want you guys to message down below in the comments or send us an email, which is all in the description. We will be more than happy to help you out. We have an academy in which we are absolutely consistent and profitable. We have a 90 to 95% win rate. We trade live Tuesday, Wednesdays, and Thursday. With the holidays coming up, we'll be trading less until the new year, but we want you guys to be in the community. There are three main reasons why people are not profitable when they're trading. Number one, they have lack of community. Regardless of what kind of community you are, whatever your goal is, you have to have like-minded people with that same goal. Number two, they have lack of consistency. Once they do not get something fast enough, they stop and give up, or they say it doesn't work. You have to stick with it because we live in a microwave society in which we want things quickly. And we all know when there are things that are worth getting, it takes time. You have to focus on that one thing and master it. And then number three, proper trading education. You have to have proper trading education, guys, in order to do it. You want to make sure that whoever's teaching you resonate with you and your personality. They have the remedy to your problems and understand it can meet you where you're at. We know that we have all three of those things. So we hope that you join us soon. If you haven't already, we will see you in the next video, guys. Take care.